my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is a daily technical analysis of stock index futures. I'll start with UK FTSE futures. Okay, on the surface, yesterday was a second, if higher, indecisive spinning top. However, there is a lot going on here. You see, this was the first true close over the upper trend line, currently 74.70, of a possible descending expanding wedge pattern. Currently that's between 74.70 down to 69.32. Now, I am not entirely happy with this pattern. Hence there's a heavy dose of the word possible in front of it. For starters, it hasn't completed the usual requisite 5 touches combined of both trend lines. Yet, leaving that aside for the moment, and also its short, steep, downward angle, if we do have such a pattern, then yesterday was a break higher. This leads to 2 diametrically opposed questions. 1, is it a false break higher? And 2, how high will the move be? Okay, so for question 1, well, we don't know yet. And I'll leave that as it is for the moment. For question 2, well, a primary target X would be in the 78.67 area, with a secondary and much harder to get target X1 in the 78.46 area. These are big asks of this market, especially from what is a not too good looking descending expanding wedge pattern. There's a big pinch of caution over this one. So what is above as resistances? The obvious one is May's high at 75.99, and then the congestion around the January 2020 high at 76.30, a more recent high at 76.35. Meanwhile, on the downside, we have the combination of the 2 moving averages, a rising short medium moving average currently 74.23 and a medium moving average currently 74.20. This last point brings me nicely to a new factor which, though lagging, may help influence the bullish side. We have a golden cross of the short medium moving average up over the medium moving average. Now this, I'll finish that bit. So far today, well, a lower opening and a dip down, but not as far as yesterday. And though the high is actually close to yesterday's high. However, right now it looks very much like an indecisive doji cross, if anything. German DAX futures. And I may not see it, but it's an indecisive spinning top yesterday. You see, in the last 5 sessions, 4 of them have been either indecisive spinning tops or indecisive doji crosses. This speaks volume about what the market's trying to do to both the upper time stroke upper trend line, currently 14.051 of the January to March bearish shift pitchfork, and late March to date descending expanding wedge pattern. As a point of reference, this last pattern is much more clearly defined here than in UK FTSE futures. On top of this, the market is having issues with the neckline, currently 14.035, of the December 2021 to February 2022 head and shoulders top. And that as well. As a final point, and perhaps this can also go some way to explain the indecision, the market is still caught within the previously highlighted mess of resistances between 14.079 to 13.804 on the downside, which includes the February 2020 low at 13.821 and the 50% Fibonacci line of the October 2020 to November 2021 move at 13.804. Hence, this is all a real mess at the moment. So far today, well, a higher open, though still just within the resistance zone before a dip back into it, below the upper time and neckline, but not much further. Since then, prices have recovered, and we're currently looking at, yes, we've guessed it, an indecisive doji cross or a spinning top right now. US E-mini S&P futures. A reactionary bullish white soldier yesterday. There was also day 2 in a 2-day bullish separating lines pattern. It was not a perfect example of such a pattern, but it still exists. The market opened higher, dipped to the congestion at 39.11, but steered clear of it this time and punched up through the February 2021 high resistance at 39.59 and even the next resistance at 39.89, but finished in between the 2 congestion areas. Overall, this is a further pull up and away from both the lower time, currently 38.99, of the previously highlighted January to March bearish shift pitchfork, as well as the middle time, currently 38.66, of the also previously highlighted bearish Andrews pitchfork for the same period. Regular watchers and listeners will know I'd earlier highlighted the crossover of these two times as a period where one could expect one or more of the following: volatility, a change of trend, or a reinforcement of trend. As I previously said, this was an important time period, and I'd highlighted it with a red circle. I'd also drawn another red circle for the next crossover to come, for the same pitchforks, assuming that both pitchforks will still be operational, which they look like they may be. This is of the upper tine of the bearish Andrews pitchfork, currently at 42.41, and the middle tine of the bearish shift pitchfork, currently at 41.99. And it will happen in a few days' time, on the 7th of June. Hence, I renew my warning and what to look for volatility, a change in trend, or a reinforcement of trend. One final point. All this action this week has initially countered last week's weekly key reversal down, but has not eliminated it completely, so caution. So far today, well, an interesting move, a slightly lower open and a move down to the February 2021 high at 39.59, but it seems to have been an ammunition gathering exercise as the price has moved up, tested the overhead congestion at 39.89, just pushed up over it, and now looking at the next congestion area, which is the 50% Fibonacci line of the October 2020 to January 2022 move, and that's at 40.18. Thank you for listening. The short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investors International Limited. Here comes the final bit.